Hey traders, Raghee here. We're going to talk about three markets that are very much the cornerstone of the way I'm looking at the current economy, the way that I'm positioning my longer term portfolio, and some trading symbols. And that is gold, GC, bonds, and that would be the ZB 30-year futures, and the dollar. Now, the dollar isn't something I'll necessarily play with the futures. I can look at Forex, although of course you can play the futures. There are some alternatives. We'll talk about that in this video. All right, so let's start with gold. First question, what is my directional bias? That is always the first question. Would I rather be a buyer or a seller? And this is one of the easiest ways to keep yourself out of trouble. If your answer is, I don't know, don't trade that market. So this market is more sideways than it's been for a long time. We use tools like right here, our yellow wave indication to confirm that this is indeed a sideways market, which means down at the lower end of the range is where I want to be a buyer, lower end of the range. Okay, we can see a number of times we've reached that area. So am I bullish in gold? Yes. Am I a buyer? Absolutely, but not in no man's land. Meaning until I get to the top of the range where I want to take profit, or until more specifically, I get to the bottom of the range, I'm going to sit on the sidelines. Avoid no man's land, most especially in sideways markets. Moving on then to the 30-year bond market. Now, if I want to be long bonds, and this is a really popular question that I get, like, Rog, we're not going anywhere, and that's true, but it goes right back to top of the range, bottom of the range. So here's my low or the bottom of the range. Here's my high or the top of the range. This is where we take profit. This is where at the bottom we get long, right? I want to be a buyer at the bottom of the range. So that's, again, going to continue to be what I look for. Now, my expectations for follow through are much less. Now, eventually I do think we'll break out, but we haven't yet. We're kind of stuck with the resistance that we see in this area. So I'm going to respect that and pay myself while I can and not when I have to. And I'm also going to respect the fact that we wait for a little bit more weakness and we get down to this area like we have been a few times over the past 4 or 5 sessions. And that is where we get long at the lows, right? Long at the lows. All right, dollar index. This one's been an interesting one, and dollar index is still something, generally speaking, I want to be a buyer of. I do want to be a buyer of dollars. We can get into all the reasons for this, but the question is, okay, Rog, where do we want to be a buyer of dollars? And so you'll notice that there has been a support level that's worked for some time, and that support level stopped working. So let's acknowledge that. The support level was right here at a +1 standard deviation. And we actually were, doing a pretty good job buying off that, waiting for the follow through. It did not come. In fact, we would stop at approximately a +2 standard deviation. So you can see the resistance was at +2. The support was at +1. What does that mean, +2, +1? That is simply the volume weighted average price and price standard deviations, okay? So support and resistance measured by a volume prioritized price level. So sideways we went for almost 2.5 months until finally we've broken down. Now this is a pretty significant breakdown. It has taken out the support of the 200 EMA and it's now at the mean. I will say this, and this is not to be dramatic, this is actually a really important level. This area here between the mean, between the value area low for 2020 and the 200 EMA. If the bulls are going to make a stand, or if markets are going to start to cool down on their selling of the dollar and the buying of, say, Australian dollar, New Zealand dollar, or even euro, this is the place, this is the time that they're going to do it. So I'd keep a very, very close eye on this. Otherwise, we could easily sink down to the value area low, or even a -1 standard deviation, or even a -2. So there is quite a drop if the market doesn't attract some buyers in this area, which is to say equally the market should think about buying dollars while selling euro, selling Australian dollar, selling New Zealand dollar. So there is a back and forth there. But these are the 3 markets that I've got my eye on. I'm bullish on all of them. The dollar is the one that's sitting in the most precarious spot. All right, that's a breakdown of these 3 markets, and I'll see you in the next update.